This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and welcome to another edition of the Alternative Investing Advantage podcast. My name, as always, is Alex Perny, and today we are very pleased to welcome on Jonathan Awde, which is the president and CEO of Dakota Gold Group. We're very pleased to have him on with us today. If anyone has paid any attention to precious metals or the metals markets in any capacity, in at least the past, since the beginning of the year, the past 4 or 5 months, you'll have noticed one kind of very interesting thing, and that's they tend to be going up and to the right for a lot of them. But that doesn't necessarily mean that everything is going to continue in any particular trajectory. If you've invested for any appreciable amount of time, you know that there are cycles and things go up and down. But we're going to be kind of talking about some of those market factors, what's kind of going into what is going on with the precious metal markets today, why it might be beneficial for you to move in one direction versus another, and also just bring you some really great information that I'm sure Jonathan would be more than happy to kind of share with you today from his perspective, being on the precious metal side of the equation. So Jonathan, thank you very much for being on with us today. If you wouldn't mind, give our listeners a little bit of a background about yourself and your firm.
Sure. So again, Jonathan Awde, President, CEO, and co-founder of Dakota Gold Corp, which is revitalizing the Homestake district in Leeds, South Dakota. So a lot of people don't know that the Homestake mine in Leeds, South Dakota, is still to this day the largest single gold mine in the history of the U.S. And we acquired some assets from Barrick Gold out of Barrick's Closure Group in 2020 and 21 because Barrick acquired Homestake in 2001, but they never acquired Homestake for assets that Homestake had in South Dakota. They bought it for other assets that Homestake had in its global portfolio. We completed a merger in 2022, and we've made a couple of discoveries contiguous with the Homestake mine in the same geological formation to what Homestake was mining for 125 years. So very exciting times for us.
Yeah, that's awesome. And it's kind of interesting to look at it from the perspective of, the origination of precious metals. People more often times, and good, bad, or indifferent, kind of focus on the end product. We don't really necessarily look at the supply chain of anything, but just as with anything, there's money to be made in many different levels of the stack when it comes to any particular asset, whether that's early stage investing into startup companies versus investing in, a company that's been around for hundreds of years like GE, or, doing new construction versus buying in an established market. Again, there's a lot of different ways to kind of frame this, but specifically what I'm really kind of interested in is taking the angle of looking at that low level on the stack. Again, just, distance wise from kind of the end use product on kind of what you're doing. So, with regard to, the actual, investment side of this thing, how does that kind of flesh out with, and forgive me, I kind of have a loss of words here, but kind of the prospecting end of this. Again, I'm very familiar with the end use and the investment side of it, but not really too much on this end of it.
So it's really interesting. We are an exploration and development company. So we have 4 drill rigs active right now. And I think part of the challenge the industry has faced is that it's taking longer and it's more expensive from discovery to gold pour, which you were just referring to actually holding a physical doré bar in your hands. The average time now is well north of 10 years. And there's been a general underinvestment in exploration. So there's a smaller pipeline of development assets in the world that are available today. And, I think that's also part of the opportunity. So we feel that being in a state like South Dakota that has, a great educated, hungry workforce, phenomenal geological opportunities, and we're on private ground. And I think the U.S. sometimes unfairly gets a reputation for being a challenging place to permit or operate a mine, especially a new mine. And one of the things that the Biden administration is looking to do is give some kind of preferential treatment to companies that are repurposing already disturbed land, or if you have a critical metals component to it, because the U.S. has such an amazing endowment of base metals, precious metals, and the philosophy has been, well, let's let someone else dig it up and create a hole in the ground. And that's creating a lot of these supply chain issues and this sort of, de-dollarization trend, and, China, the rest of the BRIC countries wanting to have, their physical gold ownership in their own countries. They don't want to store it somewhere else, because when Russia invaded Ukraine, the U.S. imposed a bunch of sanctions on Russia and actually confiscated a bunch of their assets. So you're seeing these two trends, these de-dollarization trend, where a lot of countries are now looking to settle transactions, something other than the U.S. dollar. And you're seeing countries that want to, that are buying physical gold in record quantities, and they want to store it in their own country. And I think that really plays into incredible opportunities in the precious metal space, whether you want to have exposure to the big gold producers, the royalty companies, the streamers, or the explorers, or single asset developers, or whether you just want to own the physical. There are a lot of different ways to get exposure to the gold space.
Yeah, and that's something that I really appreciate. Kind of what we're going to get into is, I've heard people say it before. Again, this is again a little bit new for me, which I really enjoy. But kind of full stack investing. It's not just one end use product. There are so many different ways. And what we try to highlight on the show is that it's just because something is one asset doesn't mean there's so many things behind it that have the ability to generate revenue and returns for you. So a little bit kind of on the, kind of starting from the beginning. And again, I'm kind of under that impression as well. I have, a multitude of clients, and I've dealt in the oil and gas industry with, mineral leasing rights and a bunch of other stuff. And I have seen, from different angles, definite, constriction, in the past, even under the Trump administration, there were still carryover regulations and rules from the Obama administration. This stuff takes decades to kind of flesh out, but definitely a slowdown in exploratory actions, that are happening. For example, the moratorium for offshore drilling, which maybe I'm not necessarily opposed to living in the state of Florida. Don't want to see an oil rig on the beach, but making it more difficult to kind of acquire these things. So specifically looking at the mineral section and the strategic, focusing on the strategic and the precious side of things, how many kind of opportunities really are there for repurposing of these types of mines? Because just on general thought, when I think of mining in the United States, things that come to my mind about mines. That's a tough one. Would be things such as coal, wrought iron, or maybe lead from Nevada, but precious metals aren't necessarily something that I think people think about. So, are there still opportunities, or is this something that's kind of newly available and newly opening up to companies like yourself to position to start doing these repurposing of old existing mines?
Yeah, that's a great question. When you look at gold mining in the U.S., the center of the universe is Nevada. If Nevada were a country, it would be the fourth largest producer of gold in the world.
Really?
So 80% of America's gold production comes from the state of Nevada. Barrick and Newmont traditionally and historically have dominated production in that state. They recently combined and created a joint venture called Nevada Gold Mines, where some of the largest gold mines in the world are now under this joint venture. But again, it's an important distinction to make when you're looking for precious metals in the U.S. or even base metals, because Arizona has some of the largest copper mines in the world, is what kind of land you're on. Are you on private land? Are you on BLM, which is Bureau of Land Management? Or are you on U.S. Forest Service? And I think once you start getting into U.S. Forest Service or BLM, the timeline to permit something can be a lot longer. And if you're a big company like Rio or BHP, you can take the 5 or 10 years to permit a new mine, because you already have 15 mines that you operate. So it's not really material to you. But if you're a smaller company, or God forbid you're a single asset company, it can be a killer. So I think there's a recognition that it's certainly for copper, for base metals, a better process is needed to create a domestic supply chain of critical metals, base metals, instead of relying on foreign countries and then importing it. So you're part of the supply chain problem. You're manifesting this inflation, and that's something that's really also been challenging for the mining space. Is people see these metal prices rising, but they don't understand the cost to acquire and explore and develop and permit and build and reclaim an ounce of gold or a ton of copper has, in many cases and in most cases, risen faster than the price of gold has risen, or risen faster than the price of copper, or has exceeded in many cases those price increases. So it's going to be interesting to see what the next quarter of production looks like from these big companies, to see if the metal price increase has will attribute to margin expansion, whether they can capture most of that and return that back to shareholders, or whether there still is sticky, stubborn inflation.
Yeah, but I think there's kind of an argument to be made, and I'd like to get your opinion on it, is that you have kind of two market forces driving this. You always have the classic model of supply and demand. You have people that need things like, silver, they need things like titanium, they need cobalt, they need all these things for anything in tech industry, or just, it's almost impossible to not touch a strategic or a precious metal in your daily life the way we live now. So you have a supply that's going up, but the production side, is going to kind of drive that. But you also have this market factor of the supply chain issue driving kind of that external push from the governments to say, hey, let's be less reliant on someone like South Africa. Again, I don't necessarily know where these things are produced, but again, to the point of a foreign nation to provide us with what we need, having that done in house, I think was very well illustrated there. So it's kind of interesting to look at that. Do you think there's going to be a bit of stability, at least on the production side, for value to shareholders, that otherwise might not necessarily be there? Let's say if we were just examining this in 17, 18, and 19.
Look, I think the second part of what you've just outlined there is part of the biggest challenge. That there is a shortage. There's a smaller pipeline, and the whole world wants to decarbonize and electrify, but I think there's been a failure to recognize just how much metal is required to get there.
Mm-hmm.
You look at solar, you look at wind, and of course EVs, they all require metal. Your Apple phone, your Apple Watch, your iPad all require significant base metal component, and to a lesser extent, precious metals. So I have 4 kids, and they used to kind of make fun of me for, well, Dad, you're in mining. That's bad. That's dirty. And over the last 3 or 4 years, there's been this education process, and now they're saying, look, when done safely and responsibly, we would support it.
Mm-hmm.
And, because when I walk them through how much metal on a pound basis is in, an electric battery, an electric vehicle, all the components that go into making an iPad, a laptop, without metal, without mining, none of that exists. Without metals and mining, this electrification the world wants to get to by 2050 and decarbonization will not happen. But mining does have a bad reputation, and in many cases, rightfully so. But I think health and safety and environmental standards have changed dramatically from 20 years ago, 50 years ago. And you typically will not have a license to operate if you don't have a strong social ties within the community. And that was one of the really appealing things for us when we merged with this public company called Dakota Territory Resource Corp, was you had people so Jerry Aberley was the last mine manager at Homestake when it shut down. Born and raised in Lead, South Dakota. South Dakota School of Mines graduate. He's from here. It's a small community where everyone knows someone that knows someone. And he's really led that social charge for us. And because of him and his leadership and our team, we've had this strong social support and license to operate. And I think that's where some big companies have made mistakes, where they go into these jurisdictions where they don't really care about the community. They just want to mine and get out. Well, the community's not having it. And I think when you approach things the right way, you get feedback, you get involvement, very inclusive. I think again that's the better way to do it. And I think you're starting to see a lot of bigger companies and mid-sized companies follow that blueprint.
Yeah, and I think there's also something to be said about trying to, do this in, countries that have more regulation, because you get away from, the horrible pictures that we saw that were illustrated. I believe it was last year when the big bombshell report about, what they called was artisanal cobalt mining in Africa. It's horrendous, the things that you see. But to be able to bring this in-house with a little bit more oversight and regulation, again, I think kind of helps to illustrate, yes, we do have a need for this. Silver is the best conductor of electricity, bar none, in the world. And if we're trying to electrify things, we're going to need silver. If we're
Actually,
yeah,
and it's I learned this. So it's copper is the best conductor. Silver is the second best.
really, I always
Those
thought it
are
was
two key. Those are like two of the key elements, two of the key metals that the world requires more of to electrify and decarbonize. If you look at solar panels, wind and electric vehicles, those are two key components and two key ingredients that the world needs more of. And a lot of those bigger mines, you're seeing, depletion happen. You're seeing them, mature and starting to have declining production profiles. And, I think that's an opportunity to fill a big part of that void.
And I think that kind of really segues nice into the next point that I wanted to make. It's, it's nice to say that, hey, we're coming in and we're going into an existing mine. Well, the skeptic in anyone would say, well, why is no one currently mining it? Is it out of a certain resource? So really kind of what's the play? Is it like technological? Is it just additional discoveries geologically? What is kind of the play for saying, hey, let's go into stuff that's already been mined? Again, because I'm assuming that the amount of gold we could get out of 1 ton of dirt in a gold mine 50 years ago is probably significantly less than maybe what we can do today. Or again, I'm sure there's a lot of context you can give to that.
Yeah. So, I mean, at the tail end of the last big downturn, it was 2000, 2001, 2002, when gold was $265 an ounce. So a lot of these mines were, they were doing whatever they could to stay open and to not shut down and go on care and maintenance. So in the case of Dakota Gold, and what we did is when the Homestake mine shut down in 2001, 2002, after Barrick had acquired it, it sat in their closure group for almost 20 years. So because of the experience and the knowledge that Jerry Aberley and James Barry, our Vice President of Exploration, had, we knew that there was a lot more opportunity outside of the old mine. So we approached Barrick in March of 2020 and pitched them this concept of acquiring some of their assets out of their closure group. We had the data, it was on private ground, and we had Barrick's blessing. And, we've made 2 discoveries less than 3 miles away from a 40 million ounce gold deposit. 40 million ounces. We're right next door, contiguous. We own the land. So this was a rare situation of, sorry, just something clicked on my screen there. This was a rare situation to, timing is everything. If you talk to any resource investor who's had longevity and who has capital, it's about understanding cycles. And it's when you buy and it's when you acquire assets. And because this was in Barrick's closure group, Barrick was looking to divest. Barrick didn't acquire Homestake for South Dakota. So we took what we already had and what we knew, and getting that data from Barrick really opened up our eyes to what this opportunity could become. We grew our land package from 5,000 acres to 50. We've made these 2 discoveries. We're coming out with a maiden resource for one of our other projects that's only a mile away, all in close proximity to this, one of the largest gold mines in the history of the world.
Yeah, that's definitely an interesting, kind of trajectory take on it. But to start from the kind of the beginning, the the highlights are great to look at, but what are, again, maybe some of these things that you didn't run into, but at least from the investor perspective side of things, what are some of the challenges in doing this? It's easy to say, hey, okay, great, there's a gold mine that this company had on their books that they're trying to sell. The analogous thing I would look at is, from what I did a lot of for clients in the, 12, 13, 14 was trying to buy REO bankroll properties from foreclosures. It's easy to see, hey, there's these assets that a company has who's looking to divest. Let's get in on it because there's a value add here. But what are some of the kind of the challenges that come up with that? One is
Alex,
it just
there are so many challenges.
yeah.
I could probably spend a day on all the challenges that exist when you look at, acquiring an asset. So you look at, if you're acquiring an old mining district, there's going to be some kind of liability or exposure. What kind of land are you buying? Do you actually own the land? Because it's very common for companies to acquire the land and never run title, never actually understand the history and the chain of ownership. Geology. Look, every deposit that's found nowadays will have some kind of geological or metallurgical or permitting challenges. Proximity to water source, that's becoming the key hot button issue. Metallurgy is about how much gold can you extract out. The higher the recoveries, the better the economics are going to be. And then how do you finance it? And then when you have a period of time where there's low metal prices, what do you do? Do you do less? Do you put your foot on the gas pedal? Do you try to grow? Do you try to acquire? Personnel. I mean, there's been the challenge, one of the challenges that the industry faces is that a lot of the talent, are in that 60 to 75 years old. And they don't want to work 70, 80, 90 hours a week. And a lot of the educated youth, they're not going into engineering or geology. They are in, smaller percentages. So there's, and then it's not, it historically has not been a very inclusive industry. So there's so many, and then of course, permitting is a big one, and that's been a big issue for the industry. So there's so many challenges, but then again, you have good people who understand that this is a business, understand the commercial aspects of moving a project forward. And you have to have this kind of radical truth, radical transparency, meritocracy, the best idea wins. And when you take shareholder investments, shareholder money, as long as you put the shareholder first, I think you generally come out very well. When you think like an owner, you come out very well. If this was my money, would I spend it differently? So there are a lot of challenges, but in all of that, there are so many opportunities. And, that's what we found in putting this together. And we, completed the merger on April 5th, 2022. So in less than 2 years, we've made 2 discoveries, and we're coming out with a maiden gold resource. And we've grown the land package 10x. And even though gold prices have gone from, kind of 1950 to 2430, and they pulled back to 2320 as of last trade, 2315, excuse me, there still isn't a lot of capital flowing into the space. Just over 1% of global assets are in the gold space. So I think it represents one of the last areas of deep value, and arguably the biggest disconnect ever exists right now between elevated gold prices and suppressed equity prices.
Yeah, those are really interesting points. You brought up a few things that I'd like to kind of drill down on. And one question that I do have for you is when it comes to mining, I think it's easy enough to, at least for me, and I hope our listeners to understand, a mine is, where they dig it out of the earth, but that's, you don't dig up a gold bar, right? You don't dig up an American Eagle. So is the refining done like adjacent to these things? I know, like at least with oil production, you pull it out of the earth and then you send it to Houston or Saudi Arabia and it gets refined. What's the kind of disconnect between that and the end product? Are the refineries on site, or is it just an extraction and or shipment type of thing, or does it vary?
It absolutely varies. Some companies, some mines are designed where they have their own mill, so you will get a certain purity or percentage in a gold doré bar, and then it might get sent to a refinery to get to 99.9% purity. But a lot of mills nowadays will get you to that, very close to that purity you need. But again, every situation is different.
Okay. Is it again just like wildly different, or is there like a commonality in this?
Well, some mines have other metals as byproducts. So some
Okay.
metals will have, silver. Some will have copper, gold, and silver. And there's different extraction methods that are required to optimize your recoveries. So again, every situation is different. And again, for an open pit mine, you may have to move 4 tons of waste for every ton of ore.
Hmm.
Whereas an underground mine, it might be much lower. Typically, underground mines you have higher grade. So underground mines are typically a little bit maybe easier to permit because there's less of a surface footprint. My business partner and co-chair of the company, largest shareholder, is in the Mining Hall of Fame. He permitted what is now Canada's 4th largest gold mine, so from discovery to gold pour in under 7 years. And
Oh,
part of
cool.
why they were able to get environmental support and government approval was because there was a smaller surface footprint, smaller surface disturbance, because it was a large underground mine.
Gotcha. And that definitely kind of makes sense. So, I would just kind of lump them all into the same, group of saying a mine's a mine's a mine. But, in reality, looking at something where they're, kind of the old adage of just like taking the top off the mountain, is a lot more palatable to people, at least in a, just general sense. Do you want to live next to an open pit mine or a little hole in the ground where they just kind of drive trucks in and out of? Granted, they probably maybe have well, I'd say probably open pit mining generally probably has a bigger, impact on the environment, but they're doing the same thing. So, with kind of going back into the aspect of the the issues that kind of arise in this, is it something where, at least from your perspective looking at it, that it's easier to do it all in house, like have that mill on site? I would think that, at least from my, again, limited knowledge of gold production, the refining of gold can be inherently, very toxic. I think they use is it arsenic is what's used to extract, or
It's cyanide.
um, cyanide. Yeah, so not a altogether pleasant thing. But just like with anything, industrial waste and chemicals, it can be done effectively and safely. It's just a matter of doing it effectively and safely, and not just pouring it into a river. So, is it something where you mentioned liability as kind of one of those key tenets of the navigation of all this? A mine is a large, heavy industry thing to get into, and besides just personnel issues, there's huge environmental concerns too. Is it something where, again, is it just use by use basis for what you look at, and maybe kind of illustrate, what you're doing in North Dakota as, what you're looking at and why you're doing it in the certain ways that you are?
Yeah, so the Homestake mine that operated for 125 years in Leeds, South Dakota was a mine that had very high recoveries. It was easy to extract the gold from the rocks in the process they utilized, and there weren't many nasty deleterious materials that came from that resource. And whereas other areas could be acid generation, could have other nasties that come from producing, but with the kind of material that we have, we don't see that. But we are very conscious. I mean, I hired Patrick Malone, who ran Barrick's Closure Group. So he's an environmental lawyer. He's been an invaluable, addition to the team. And we do look at the environmental aspect. We look at bonding. We look at water. We look at how it all ties together. And that's one of the attractive aspects of this district.
Yeah, and I'm assuming also, again, going back into why choose an existing mine, is that the perception and the optics of it are kind of already there. You don't have to say, hey, look, this beautiful pristine wilderness that we're coming into, even if it is private land, hey, we're going to go dig up a bunch of stuff and there's concerns. It's the perception, at least, and I'm sure that probably also plays just in the psychological aspect of trying to get this stuff permitted, is an easier sell on the powers that be, to kind of say, hey, we're reestablishing this. We're not doing anything that hasn't been done here before. let's, try to make this a viable option. And of course, states and governments make tax revenue. There's not just a one-sided effect to this. There's job creation. There's a lot of stuff that goes into it. And especially I would imagine if industry has been there, again, the sell on that side is easier from the existing portion of it. So let's talk timelines. Again, it's understanding that there's, liabilities to be had, there's money to be made, but coming in, at least from your perspective, on looking at an existing mine, what are some kind of like tool up periods for this stuff? It's not just turning on the power. There's workforce. There's again everything else. So at least from your perspective on what you're doing, what do the timelines look like, and are those average in the industry, or are they again a spectrum?
Yeah, I would say best in class from discovery to gold pour would be 7, 8, maybe 9 years. I would say the new norm from discovery to gold pour is probably 10 to 12 years when you look at the permitting aspects and how challenging it is now to permit for a new mine, raising the money, understanding the deposit, the engineering aspects, geotech, personnel, and a lot of companies that go from exploration to development or production, fail because it is a different skill set required, and a lot can go wrong. And if you get your timing wrong, where the metal prices are coming off, your cost of capital rises, and that can often lead to the equity value being destroyed. But because we're on private ground in a previously disturbed, area, I think we have an opportunity to be in the lowest quartile.
Yeah, that's again, I think plays very well into, the easy to understand aspect of this. Now, what I'd like to kind of transition to is, kind of the investment side of this. It's important to understand kind of what you're investing in it, but the key thing that I think is the first and foremost is that you need money to do this. So, is the capital raise for this kind of stuff, or the financing aspect, at least from a general perspective, is it something that is private capital raise, kind of like private stock offerings? Is it like in like what's it called? I'm sorry. Is it like institutional debt? Is it a mixture of both? Kind of how do these things populate, and how are you working that problem as well?
Yeah, so I think for an exploration development story, you have to be very careful looking at companies that take on debt, because at that stage you don't have any revenue. So if there's a permitting delay or a problem that you encounter and you have debt and you can't service your debt, the lenders may say that you violated covenants and call the loan or call the debt. But I think we've raised just under $120 million through equity in the last 3 years, and again, that's been to institutional investors and high net worth. I don't believe that an exploration story or any company, quite frankly, should ever take on debt, because it transfers the power from the equity holders to the debt holders if things go wrong. Because sometimes the duration of these loans are so short-term oriented that it just you're always playing catch up. You're always being kind of reactionary. And myself and my business partner and others in the company have been doing this long enough where we have relationships, and people have backed this management team to carry out a strategy and execute on our vision. So as we get closer to either putting economics around one of our deposits and looking at will this thing be a standalone as a part of a complex, there's a different network of investors that you go to. For that situation, if you're looking for construction finance, you absolutely would finance part of it with debt. And we're looking at those kinds of options, as we speak, for our development project, which is called Richmond Hill.
Gotcha. So, and when you say debt, we're talking, just to make sure we're talking the same thing. You're talking about institutional commercial debt, right? Not necessarily like something like a convertible note or debenture issues, correct?
I mean, convertible notes, there's a whole slew of investment products that are available to mining companies. You can do a stream. So, you can get money up front for a percentage that you sell of the gold or the silver or the copper from your resource. and it just depends on what kind of investor, how advanced the project is, and what your investors kind of, quite frankly, view of risk or the geological area that you're in. Typically, when you look at countries, certain countries in Africa, or certain countries in Southeast Asia, or certain countries in Eastern Europe, they typically will carry and come with a higher risk profile. So investors will want to be compensated for that higher risk profile, because historically some of those governments have moved the goalposts. A rule of law doesn't apply. So the jurisdictions which typically garner the lowest cost of capital are some parts of the US, Canada, parts of Mexico, Australia. That's typically where rule of law applies, and they have an established mining framework, permitting rules, and strict environmental standards. So investors like that.
Yeah, absolutely. And that brings up a good point to the risk profile as well, is that realizing when, mining is such a global, play, that looking at, it's hard to compare apples to apples, and a lot of times, if one gold mine in the United States that has a certain production profile and runoff to be able to get started, transplant that to another country that, let's say, has, more of a, and again, I use this term in a very practical sense, more, communist structure, where maybe they have required covenants where the, state owns a certain percentage of that particular endeavor. I mean, you see this a lot in oil exploration and things like that, where, an instance that's, happening in, Israel, or that's happening in Ukraine, can greatly affect what's actually occurring, even though gold is not what they're fighting over. It's philosophical and land. But, to understand kind of some of those more geopolitical aspects is a lot more apparent, I would feel, in this realm than maybe a lot of others. But again, a little bit of a tangent, but just something I like to illustrate, because better or worse, I always like to look at the risk a lot. It's, what I find interesting in any investment that I look at for clients. But kind of scaling back a bit to the actual investments that are being offered. So again, I think it's easy to understand that investing in a pre-revenue company, if they have a lot of commercial debt, especially in an equity position, is inherently risky, especially, in this area where you have, 7, 8, 9 year runoff. A lot of people do that in tech, but it's a lot easier to sell a tech IPO than it is to say, hey, we have this mine, who wants it? Those closings, might take a little longer, let's say. But from the aspect of shareholder value and what people can expect, again, coming in, let's just look at what you have going on as an example. You've raised, from, equity, money as an equity play from institutional high net worth individuals. But as far as like what a shareholder can expect, and I'm sure it depends largely on, what stage a company's in. Is this something where it's primarily private stock offerings? Is it something where it's like limited partnerships with a preferred rate of return being paid? Is it just a long-term equity appreciation play? Or what are some different kind of investment ethoses that are being utilized in this space?
Yeah. So I think, look, any public, gold exploration and development company that trades on a public exchange, and typically it's either the TSX Venture, the Nasdaq, or the NYSE American, or typically the NYSE Big Board. Mm-hmm. So you can buy shares out of the open market. If a company is looking to do a financial offering to raise capital, that could be equity, it could be a convert, it could be a preferred, or it could be debt. Mm-hmm. We are not out actively marketing for that right now, and this is not a solicitation for anyone to buy our shares. But if people are looking for exposure of your viewers and your listeners, if people are looking for exposure to gold, there are a number of ways to get exposure to owning gold. And it's an interesting time, because you have the biggest disconnect of all time ever between elevated metal prices and suppressed gold prices. If you looked at the average chart of a gold producer, a mid-tier gold producer, an explorer, developer, very few would be at or near their 52-week highs. Very few would be at or near their all-time highs. So it's super interesting time. But again, it comes down to what is your appetite for risk, your tolerance for risk, and your timeline. Mm-hmm. Starts there. And,
Yeah.
once you understand that, then it's easy to look at, okay, how can I gain exposure to this?
Oh, absolutely. And I think that's a good point to bring up of just like looking at it individually. There's certain, you can buy indexed and exchange traded funds that track, anything that you want to. It's kind of wild how they package these things together. But from the perspective of, again, just to on the capital raise and the influx to this, are most companies doing it as a just an IPO, like coming out and saying, "Hey, we are going to be raising capital on an open market," or is it being done on the private side? Because that's where basically the entirety of my career has been spent on the private side of the investing. Non-public companies, startups, new ventures that have that attractiveness of the multiple X return. Again, does it just kind of depend on the scale of the project as to where they actually go for capital for this?
Yeah, so there aren't a lot of traditional mining IPOs. I would say that a more common way is for a private company to merge with another company or to acquire an asset. Or, like, for example, Newmont acquired Newcrest. So Newmont is the largest gold producer in the world. They acquired the third biggest gold producer in the world and called Newcrest. And Newmont has this, they want to operate tier one assets. So they produce over 350,000 ounces or 500,000 ounces of gold a year at a certain cost profile. So there's a few assets that are in that portfolio that they acquired from Newcrest, which they feel are not tier one assets. So they're going to sell some of those assets that a mid-tier gold producer might want to buy. So that's a more traditional way. And in Canada, it's more of doing what's called a reverse takeover. So you have a private company doing a reverse takeover of a public vehicle. Whereas for the traditional American investor, they don't like the RTO. They'd rather fund an IPO or a private company doing an uplist or filing an S1 or merging with a company that has a listing already. So there's just different ways to do it, but there's a lot of overlap.
Sure. That's really interesting. Again, it's whenever I get to look at something that's, divergent from kind of the area that I look in, I could probably talk to you for 2 hours just on that because that's where I start to really, nerd out and I'm like, this is really, really cool. Just the fact that it's so different from the industries that I've been involved in for the past decade plus. But now that we've kind of covered, I think most of the full stack of, in general, this portion of the, the metal space, I'd like to get your opinion kind of on, like going forward, like where do you see your projects going? Kind of what are your thoughts on the market going forward in this particular segment?
Yeah, I think I'll answer the macro first. I mean, I think this is a really exciting time to be looking at all metals. For the two kind of macro themes pertinent to the gold space, with this de-dollarization, again, you're seeing a growing number of countries that are choosing to try to settle any kind of transactions something other than the US dollar. So I think gold is going to play a central theme and role in that. And you're seeing this incredible, extraordinary physical buying from central banks in the East, and they want to store their gold in country. So you're seeing this incredible bid in the physical demand side, massive premiums being paid, and really for the first time ever, gold historically has always been priced in London or New York. And now you're seeing gold starting to get priced in Shanghai. So I think, and then of course you've got an election year, you've got the markets had priced in, 3 rate cuts, 5 rate cuts. Now it's gone down to 2, and is the first one September, or is it not until Q1 of 25? So, Diamond of JP Morgan had talked about, the higher for longer narrative that really certainly seems to be playing out because you have really mixed economic data. You've had a hot CPI print recently, stubborn inflation. And again, coming into election year. However, you have a government that's spending $1 trillion a year on their military, over $1 trillion a year now to service your debt, and you're still running $2.5 to $3 trillion annual deficits. At some point, that's not sustainable.
Sure.
So I think that's interesting. So from the macro standpoint, I really like what's happening there and how that will impact the gold price and money flowing into the gold sector. From our company, I think that, in our press releases, we've talked about our discovery at our Maitland project, which is contiguous with the old Homestake mine, is akin to this western ledge system in the old mine. So there were 17, 19, and 21, 3 distinct gold zones that were mined that had over 6 million ounces of gold. So we've discovered 3 ledges within our what's called our JB discovery, right next to the old mine, where we have multiple high-grade intercepts in these 3 distinct zones or ledges. Our last intercept was 4.5 meters of 25 grams. A press release before that, it was just over a meter of 4 ounces per ton. So very, very high grade. The same system, and it wasn't explored because Homestake kept chasing this ore body down to 8,000 feet. And when they did start to look outside of the old mine, they were very successful. But again, low gold prices and it shut down. And this is part of this amazing opportunity. So I think you've got a management team that owns almost 25% of the company. We are aligned with our shareholders. We have access to capital. And we have phenomenal technical people led by James Berry, our Vice President of Exploration, and Jerry Aberley, the last mine manager when the mine shut down. So you have this geological expertise combined with people that have had commercial exits. My last company was a company called Gold Standard Ventures that I co-founded. That was bought by a company called Orla Mining for $300 million. And then my business partner, Bob Quartermain, was a co-founder, CEO of Pretium that was bought out by Newcrest for $3.5 million. And the company prior to that was Silver Standard, which he grew from $2.5 million to $2.5 billion. That's why he's in the Mining Hall of Fame. So you've got this cadence, this sense of urgency where, putting the shareholder first is in our DNA.
Awesome. And I think that's, always good to hear from the people that are, out there raising capital or that have shares to buy. Always make sure that you're looking at people that are actively at least trying to be good stewards of your capital.
Yes.
It's a good thing to hear. So if people are interested in kind of learning more about this space, so they're good educational materials they can look at. I'm sure you have a website. I believe is Dakota Gold is part of a New York, like an NYSE listed company, correct? You're not directly listed, but adjacent, correct?
Yeah. So there's 3 different tiers on the NYSE. We're on the NYSE Amex. So the symbol is DC. David Charlie DC on the NYSE Amex. It's about a $220 million market cap. We've been publicly traded for 2 years.
Awesome. Great. Do you have a website they can check out as well?
Yeah, it's dakotagoldcorp.com. There's a lot of information available on the website. Also, all my contact information is on there. So if anyone has any questions about the company, management, or the industry, please reach out, and send me an email, send me a text. There's a lot of information on there, not just about South Dakota, the Homestake District, but on and what we're doing, but also on the industry as in and of itself.
Fantastic. Well, again, the most precious resource we all have is our time, because we can't make any more of it, and in this context, can't mine any more of it. So sorry. Had to make the joke, but I didn't. I do really appreciate you taking the time out of your day to talk with us and our audience. I appreciate it. I got a lot of value out of it. I'm sure everyone else will. With that said, my name is Alex Perny. This has been the Alternative Investing Advantage podcast. Thanks, and we'll see you on the next one.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.